the least actually. Sundaram Finance's TD Srinivasaraghavan, Managing Director, is with us. Good morning, Mr. Srinivasaraghavan. We are meeting again after the demonetization announcement. How does life look? Does it look like now people are able to find the money to repay? Are people coming back for new loans at all?
Okay, let's pick up from our last conversation. I think I had sort of wagered then that it wasn't going to be Armageddon.
Said it's Armageddon, sir. We never said it's Armageddon. I'm only saying, is it a one-quarter pain, two-quarter pain?
Those are my words.
Okay.
Yeah. No, joking apart, I think it's been less painful than all of us might have feared. Specifically, I think the big fear was how recoveries would be impacted. I'm happy to be able to say, speaking for our company, that both in November and to date in December, our collections are tracking as good as they've been through the year. That is, up to October, whatever was our collection, the same trends are continuing even as we, get to the end of December. So that's the first thing. In terms of demand, loan demand, November was certainly muted, but that was not only because of this factor, it was also because November generally tends to be a little bit of a dull month, but it was dull. December, the first 10 days were still a little muted, but in the last week or so, we are starting to see more footfalls in auto dealerships, for example. We are getting more deals in, even on the commercial vehicle side. So it seems like, people are sort of readjusting to the new reality.
Okay. Mr. Srinivasaraghavan, good morning. What about the numbers as far as loan disbursement is concerned? Has it fallen since the last time we chatted with you? And what do you see as the loan disbursement growth, say, over the next 3 to 6 months?
All right. Since we last spoke, loan disbursements, because, as I said, if you look at just November this year over November last year, there was actually growth for us, but I'm not making too much of it, right? But overall, if you look at YTD, our loan disbursements are still, decently up, so there's no concerns there. And typically, Q4 you would expect would be, a good quarter, and there is also, I think, a reasonable degree of certainty now that there will be pre-buying on the commercial vehicle side because of the new emission norms kicking in on April 1. So I do believe that Q4 will be decent. It may not be, one of those big parties which sometimes we've been witness to in the past, but I think Q4 will see decent volumes.
Drill it down to some numbers, Mr. Raghavan, because in Q2, for example, your AUMs were around 20,000 crores, which was a growth of about 13%. What are we looking at in Q3 and Q4?
Right. I think we'll be in that ballpark. I'm not able to, wager a specific number, but we will not be too far away from that. It will be in, let's say, the low teens, something like that.
Okay. No,
but certainly growth.
Okay. Q3 and even in Q3, you think you will have a year-on-year growth, Mr. Srinivasaraghavan? I'm asking you again because truck freight rates have fallen in several pockets. No takers, we were told. So I'm asking you whether, you could have as much of a loan growth in Q3 as you did in the previous Q3 or any more.
Well, compared to Q3 of last year, yes, I think there won't be growth. That's fair to say, because December, as I said, is not certainly not as buoyant as you would expect December to be. So Q3, yes, we won't. I don't expect that there'll be too much growth, or if there is growth, it'll probably be marginal. But Q4, I think, will look more or less like any other Q4, but perhaps a little lower, as I said. But I'm certain, as we speak, that we are looking at growth in Q4 overall.
Do you track your fleet guys product-wise at all? I mean, we are trying to get to one level below what you are talking. What moved slowly in terms of freight? Did vegetables and fruit move slowly? Did crops move slowly? Or did cement move slowly? Where did the lack of growth come from?
Okay, listen, there's two parts, right? One is movement of freight, which is really talking about utilization of capacity that's already on the ground. And the second part is new vehicles added, which is what, you talk about when you talk about loan growth and so on and so forth.
Okay.
So these are two distinct things.
Yes.
So if you're talking about movement of goods, I think that tends to be sort of different in different regions. I think certainly on the consumer goods side, white goods, brown goods, I think there has been a slowdown. Two-wheeler movement, there has been a slowdown.
Okay.
Cement, I think in some regions has been okay, maybe not in some others. So that's sort of a distributed picture, right? So that really speaks to the point you made, Lata, about falling freight rates, etc. Because that clearly, comes out of a demand-supply thing. So if in certain pockets demand is down, then automatically you're going to see rates dropping, right? And especially if there is excess supply in those pockets.
So, Mr.
that speaks to capacity utilization.
Okay.
Sorry, go ahead.
Yes, we got that point. Before we run out of time, I also wanted to ask you what's happening with the home finance business, because over there in the loan against property segment, we are getting a lot of anecdotal evidence about pressure seen in pockets like Punjab, etc. How weak have things gotten, and do you foresee any kind of business risk there in the next quarter, next couple of quarters?
Yeah, I think the LAP, I think much has been written about it. I think the risks are certainly exacerbated because of, recent events. We, over the last 12 months, have sort of significantly taken our foot off the pedal in terms of loan against property. And fortunately, all of our exposures in the LAP segment tend to be in the southern part, in the southern markets. So we don't have LAP exposures, in northern India, for example. So that is not a concern. But overall, I take your point, and I think it is true that the expectation is that there will be greater stress on LAP portfolios across the industry. I think that's, though, we don't have hard numbers yet to support this hypothesis, but certainly I think the view amongst experts, amongst players in the industry is that there will be greater stress in the LAP portfolios.
We do hope you will have more numbers on this specific issue next quarter, because that will have its concentric impact on, cement and other areas. We would love to hear from you on that. Thank you very much for joining us today with all those details.